brief introduction before I get into the presentation. My name is Malcolm Rogers. I come from Global Data. We're a worldwide research and intelligence company headquartered out of London. We cover a variety of industries and verticals, including technology, telecommunications, financial services, banking, consumer, healthcare, pharma, and more. So a little bit about me. I've been with Global Data for about 5 years now, covering Asia-Pacific telecoms markets. Recently, one of my focus areas has been the convergence of the telecoms world with the mobile financial services world. And this has largely been around payments, but however, there's been emerging trends that have seen telcos and fintechs expand in the region, expand beyond basic payment services to include wider credit services, and there as well as insurance and others. And there are also quite a few interesting technology trends underlying these things. So today, I just want to talk to you guys a little bit about one, the overall situation in Asia Pacific and ASEAN as it relates to mobile payments and payment cards, and then delve down into some of the drivers for the adoptions of those services, as well as some of the inhibitors, and then start the big presentation. And then we will talk about some of those new emerging tech trends that are leading the innovation in this space. And then finally, I'm going to finish off with some case studies in the region about who the active players are, as well as what the situation in Malaysia is specifically, and then some recommendations for any players in the Malaysian market who might be looking to get into this space. So let's begin. But there's the overview. So mobile wallets in Asia Pacific, of course, is dominated by China. As we all know, WeChat and Alipay completely transformed that market. You can buy basically anything using the WeChat application. At the smallest merchant, I think we were just joking. We were talking. There's even beggars in Shenzhen that accept WeChat Pay as a form of donation. But you can see it's not uniform. If you look down here, Australia is a country of 26 million, but there's only 4 million mobile wallets users there. So there's room to grow across the region. Here you can see some mobile wallet ownership penetration numbers. And again, you see China, India at the top, Hong Kong, and ASEAN is right in the middle. So in the more developed nations, South Korea, Japan, Australia, New Zealand, in the region, bank cards and ATM cards have been highly adopted for a while, and many merchants are comfortable with having electronic fund terminals and other means to accept those payments. Whereas in China, prior to the arrival of WeChat, there was almost nothing, and based on a few drivers, WeChat was able to transform that market. And ASEAN is halfway to this journey, but it's not quite there yet. In terms of who is using mobile payments by age cohort, it's easily millennials are the largest group. You can see that it's over 60% for those between the ages of 25 and 44. And this is global, by the way. These are global numbers. Asia Pacific. The most successful mobile payments platforms are the ones that appeal to this age group and allow them to use their payments where they want, whether that be through social media or advertising for those needs. In terms of market context, payment cards, which are traditional payment cards, say an ATM card, a credit card, a debit card, bank card, they're slowing in growth over the last few years, and we strongly believe that this is due to the arrival of e-payments on the scene. The more people use mobile wallets, the less demand there is for traditional payment cards. And this is even stronger in ASEAN. You can see that the growth trajectory is even lower as compared to Greater China and the wider APAC region. And again, here's another the issuance of payment cards, the growth year over year, every year there's less growth in the payment cards industry. Again, this is strongly due to the arrival of e-payments and mobile payments. In terms of payment card transaction number, again, this is declining. It's not just issuance, but it's the overall transaction value. And while there was a spike last year, we see this trend declining. As 2018, it fell again by quite a steep amount.
Sorry.
Yes.
Payment card referring to credit card?
Payment card are physical debit or credit cards. It's not necessarily credit. It can be any physical bank issued card. Whereas e-payment or a mobile wallet, it doesn't involve any physical card. Yeah. In terms of drivers for these trends, this is, by the way, from a survey that we conduct every year across the world on a number of countries about payments and consumer attitudes and sentiments towards those payments. So when you ask people what encourages them to use a mobile wallet, the two most cited things are, one, the access to loyalty programs and rewards programs, as well as the convenience of not having to carry a wallet. So those are two of the most important factors for successful mobile payments platforms. Is one, a strong rewards program, and two, again, the convenience that obviously comes with not having to carry around a wallet. In terms of the role of e-commerce, e-commerce is rapidly growing as a percent of GDP, across the globe, in China and ASEAN and Asia Pacific. And as e-commerce becomes more popular, there's a greater demand for payments and monies that can be used towards those services. And as that demand grows, there's going to be more demand for electronic money. In particular, in ASEAN, there's a lot of consumers whose first experience with the internet is via mobile, or only experience with the internet is via mobile. And so having mobile money is particularly important to them as they look to start shopping and interacting online. And so you see the rise of smartphone users in ASEAN combined with the rise of e-commerce, opening up a natural spot in the market for e-payments, mobile payments. In terms of some of the barriers, if you look at a lot of developed nations, the number of micro merchants and their contribution to the economy is particularly low. 33% in Great Britain, 30% in New Zealand, 44% in Australia. But if you look at ASEAN, the number of micro merchants, these are businesses that are less than 5 people generally. They make up a huge portion of the economy, and for them, it's hard to transact a lot of electronic payments or credit card payments because of the fees associated. If you're a large organization processing millions of dollars every month, the fees are no problem. But if it's a large percentage of your margin, then you'll just walk away from that for cash. So that's one of the largest barriers we're seeing it's from the merchant side rather than the consumer side. So in terms of regional banking trends, there's a large unbanked population in ASEAN, as everyone is keenly aware. I mean, it far outstrips the rest of Asia Pacific, nearly double the regional average. But this is actually an opportunity rather than a barrier for mobile payments and mobile financial services, as they have no traditional experience with working with banks, working with payment cards. It means they're open and willing to try an innovative service that works for them. So if you look at the change in banking channel usage in Asia Pacific, internet and mobile are the fastest growing. And in fact, in 2018, internet banking surpassed 40% in terms of the most commonly used channel. So now we're going to talk a little bit about technology trends. So these are the trends that are the most innovative happening right now in the mobile financial services space. And so this is not only about payments, but about wider financial services as a whole. And this is less of a focus on APAC and ASEAN, but more just emerging trends in general. So this is just about smartphone adoption sort of driving mobile wallets in ASEAN. So you can see over 2014 to 2018, there are a huge growth in smartphones across the region. I mean, if you look at Myanmar, smartphones went from 26% penetration of the population to 96% of the population in just 4 years. It's astounding. And this has sort of driven digital literacy across the region as well. And that's really important for driving mobile payments. And once consumers get used to transacting on a smartphone through a smartphone app, they're more comfortable with doing things like paying a merchant or paying a bill or sending money to a family or friends. And so the first large digital trend I want to talk about is IoT in banking and financial services. So the first is contextual money management. So this is basically pulling customer data from the device, customer data from location, and correlating that with spending data from perhaps their bank account or beacons in a store. And so if a customer is entering, say, their favorite coffee shop for the third time today, the app might be able to say, you've spent this much on coffee already today, maybe reconsider. And in fact, that's actually what Alipay, they ran a trial with that. They had a warning system just for that, for coffee. If an Alipay user in China entered a coffee shop more than 3 times in a day, it would send a warning saying, no more coffee. So, and then we've actually seen demand. I mean, there's a lot going on in terms of money management applications, and people set their limits and their things like that. I don't want to spend this much here. I have this much budget for entertainment. And then what happens is the device, based on location and other data, can help effectively police yourself, police the customer. The other is authentication. One of the largest concerns actually is around mobile payments is security. A lot of customers are concerned if they lose their phone, will they lose their bank account? So what's happening is some banks and mobile financial service providers are starting to use location data as well as biometric things such as fingerprints or facial recognition or voice to have a double factor lock to ensure that payment being made is being made by the person that is supposed to be the account holder. So essentially you can scan your fingerprint and then have your card next to you. And if the card is next to the fingerprint scan and they're in the same location, that releases the payment. So it's an extra layer of security. And I think, as I said, one of the biggest inhibitors for consumers to adopt is their security concerns. So this is something that banks, one, are doing to reduce their fraudulent charges, as well as encourage customers to use these mobile payment platforms. The other thing is frictionless payments. So this is about embedding payments into IoT devices, essentially. There's a lot going on. There's many companies trying to put payment capabilities into a smartwatch or into, there's one that was a ring, connected ring, so you could pay using your ring. And essentially the idea is the easier it is to pay, the convenience factor, the more people are going to want to use these services. So it's one step up to get rid of your wallet and use your phone. But if you don't even have to pull your phone out of your pocket to pay for something, that's another level of convenience. And so that's just another trend we're seeing. In terms of some actual use cases, here's one on authentication. So US Bank, which is a leading bank in the US, has a debit card with a chip, and it communicates with an app on the phone, and if both send the correct GPS location, then the payment can be made. If not, then it gets denied. So again, this is sort of, it's opt-in, so customers don't have to have that because it can be sort of cumbersome to have that. but a security concerned customer can opt into this program, wherein data is pulled off their card, the location is GPS tracking based on the chip, as well as their smartphone to release the payment. Then Ally Bank has a Splurge Alert. It's their app called Splurge Alert, and as I said, customers can set alerts for when they enter certain areas. So it's not based on the Ally Bank telling the customer don't shop here. It's the customer saying, no, I know I shop too much here. So there's a whole input list where you open up the smartphone app, drop down at these stores, send me an alert when I come in here so that I know not to spend too much. And again, it's based off of GPS data, and it's a way to sort of help consumers control their spending, and it's a value-added service that's seeing a lot of interest. It's not just Ally, there's a lot of companies doing this. The next is AI and analytics in banking and financial services. And this is actually an area that has a lot of use in Southeast Asia. So the first one is credit scoring with alternative data. So outside of financial services data, financial spending data, one of the largest consumer data sets is telecoms data, as well as location data. And so what many banks and non-traditional banks, so just fintech startups and alternative credit companies are doing, is they're pulling together data from every source that they can. If a customer doesn't have credit history, there's no bank account, then they'll look at their prepaid spend, how much they top up every month, how often they top up. They'll look at their location, how often are they hanging out in an office versus, say, a casino or something. And so they're using this kind of data to feed credit scoring algorithms that enable them to give loans to people who might not be able to accept a loan, or improve the credit of someone who might not seem so creditworthy based on a missed payment 10 years ago. And so essentially this is enabling a lot of unbanked people across ASEAN and Africa to get access to credit that they might not otherwise have had without this alternative credit scoring. And then there's also AI-driven personalization. And so this is basically using NLP chatbots to help customers make better decisions about their financial products. So the chatbot can have access to the customer's data, their financial history, and then in natural language, speak with that customer and recommend maybe you should consider this savings account versus this savings account, because based on your age and your credit history, you're looking to get more interest out of your account and you want to put more away in savings. Or it might, so if you're seeing recommendations, and it helps customers become more educated about their financial products, but at the same time it can help the banks drive better utilizations of the products they want to push. I mean, there's a bit of an ethics question there, but it's happening a lot across the larger banks. A lot of AI chatbots out there doing more than just routing calls. It's moving on to the next phase where it's communicating with the customer. Yep. NLP. Oh, natural language processing. Sorry, yeah. It's one of the building blocks of AI. So there's several categories of AI, and that's basically where a human can speak to a software chatbot, and rather than have to speak in very specific terms that a traditional software might have to use for it to get a good answer. You can speak like you would speak to a human, and based on the AI algorithm, it can parse out what you mean and apply it to the correct channel. And then the last one is document digitization, and this is based on the need in banking and financial services to do a lot of paperwork. I mean, anytime a loan is dispersed, anytime an account is overdrawn, there's a massive amount of paperwork that needs to be captured by the banks. And there's a lot of time lost in this sort of bureaucracy. And so what companies are doing is using machine vision, which is another building block of AI, wherein a computer can see a document or a picture and pick out things. So it can literally read it. So it knows that if I sign onto a mortgage, that's my signature, and then that's my name, and then that's the address. And then rather than have a bank employee input all that into their internal systems, the software will just do that. And so it saves time, and it's it reduces time to disperse loans and products, and it also reduces the manpower needed by banks. And so companies like IBM are investing heavily in this because of their experience in AI, and I think there's a major insurer in the US that they're working with to sort of completely eliminate paper from a lot of their processes based on this technology. So in terms of some of the examples of this, alternative scoring. So Maximus is a software platform from a fintech company called Signify, where it partners with mobile wallet providers and telcos in leveraging that data, the telco data, and the location data and customer behavior data to provide loans and other financial products such as phone insurance, such as they also do marketing for the telcos to drive that wallet adoption. And so it plugs into the telco data, and then it takes that telco data and puts it into other third-party data streams, which it might be Facebook data, it might be Google data, and then it will co-brand that credit score with the mobile wallet operator. So you might be a telco and you don't know how to do credit scoring, but you want to add that ability into your mobile wallet, into your mobile financial services platform. So you partner with Signify and they help you do that. AI chatbot example. Erica is the name of the AI chatbot from Bank of America, and again it uses that natural language processing and customer data to help personalize the experience for customers. So you can tell, hey Erica, please move funds from my checking to my savings, and then based on sort of the behavior of the customer, it'll eventually start to recommend things. Oh, did you want to move funds today again, Malcolm? Something like that. So it sort of increases customer experience, but also makes it's more efficient for Bank of America as well. And rather than outsource this, Bank of America actually decided to build it in-house with 100 of their own data engineers, which is, if you have the resources, it's generally the better way to go.
Sorry, how much is the take-up for the service?
So I'm not sure the exact take-up, but it's available to any Bank of America customer with the Bank of America smartphone app. So technically, if you have the app on your phone, you have Erica. They don't publish numbers on exact usage. But this is pretty recent. This was launched at the end of last year. Yeah.
Even if you have an app to access this, does the customer have to opt in order to get this service?
Again, you just have to turn it on in the app. So yeah, it's just a button. Yeah.
So the moment you have the app, you can.
Yeah, you can switch it on. Yeah, it's not like a sign up.
So you can't be a Bank of America. Excuse me. You can't be a Bank of America, what you call customer, but you say you want to use the app, but you don't want that AI aspect.
Yeah, you can have it off.
You can have it off if you turn off the app. Huh?
Yeah. So blockchain is the next technology I want to talk about. So I'm not sure how familiar all you are with blockchain, but it's essentially a distributed ledger. So it's a system of record where the record is simultaneously shared across a large network of computers, and any time a change is made to that record on one computer by one user, immediately every other user on that network sees the change. And there's a key system where the last holder has the key, and anytime there's a change made, the key changes. So it's basically a way of making it impossible to alter a record or a ledger without everybody else in that network knowing. So what they're starting to see, what we're starting to see is they're using blockchain currencies to do remittance. So instead of going through a wire transfer where there's intermediaries moving the money and going through clearinghouses, remittance companies are seeing that blockchain is secure enough for them to enter one currency into a blockchain currency and then exit that blockchain currency in the desired remittance currency. And these transfers can happen instantly. There's one cryptocurrency called Ripple where the average trade takes 10 seconds once it's confirmed. And the other advantage is typically a SWIFT transfer, which is one of the most common types of wire transfers. The average transaction fee is something like $15. And then with blockchain, I think to quote the Ripple coin again, it's something like 10 cents per transaction. So the fees are much lower. And while there's a lot of money to be made in remittance by banks and other remitting companies, the margins are just it's very high. The industry is sort of
How pervasive is blockchain-based currencies currently in remittance practices? How pervasive?
Can you repeat that? Sorry.
How pervasive is the blockchain?
So right now, there's only 2 or 3 examples live of remittance companies doing this. However, I mean, there's hundreds of blockchain currencies out there. But the major player right now pushing this is Ant Financial, based out of Alibaba's financial services subsidiary. And they're actually doing things in Asia Pacific right now, actually in Malaysia. But it's early days. I think the first one was launched about a year ago between Philippines and Hong Kong. I'm actually going to talk about this a little later on.
So they use private blockchain or public blockchain?
It's so the details are scant, but I think from what I don't hold me to this, but I think they're using Ripple since it's basically designed to be favored by financial institutions, and all indication is that, but Ant Financial hasn't come out and said who they're using. But that's my sense, anyways. I take a guess. And then there's financial trades. So there's a lot of bureaucracy where assets move through exchanges, clearinghouses, and settlements, as well as you have to provide letter of credits to prove that I'm saying I'm going to trade these goods to you. So I'm credit worthy enough. So this is my letter of credit, and there's a lot of sign off. So what's happening is blockchain is being used to speed up those transfers. So the first one is remittance. So Telemark is partnered with Ant Financial. Ant Financial is providing that blockchain remittance platform to Telenor. And again, like I said, my best guess is it's Ripple coin. So that the telco mobile wallet users in Pakistan can remit to Malaysia, and they're even waived fees for the first year of service, and the transfers are near instantaneous. It's only a few minutes, and so it's revolutionary. If you look at some of the remittance fees that like larger banks pay at charge, I mean, this is great for workers in Malaysia sending money back to Pakistan and vice versa. And then in terms of the trade, so Wells Fargo and Combank wanted to trade commodities between an American entity and an Australian entity, wherein a shipment of cotton was shipped from Texas to China. Now usually you'd have to go through having a letter of credit and all these sort of financial processes to ensure that the seller, or rather the buyer, was credit worthy enough to the seller. But instead what they did was they attached beacons to the actual shipment of the cotton that measured how much was in there and its quality. And those beacons would report back to a blockchain platform based on, to show that in fact the product was good and it was going where it was saying it was going on time, to meet all the covenants of the loan and everything. So it basically just eliminated the need for a lot of the the bureaucracy in the middle, as well as expediting sort of some of the processes as it moved from place to place, as it went from Texas to China. Then the last one is 5G. Right now, there's actually no real 5G use cases out in the market, but we're seeing some interest from banks and financial services around a next generation branch, which will have their network simplified, having less Wi-Fi endpoints. They can use 5G endpoints, as well as supporting applications, AI, VR, low latency trades, etc. And then the other one is secure slice payments for transfers. So one of the features of 5G is the ability to slice the network using network function virtualization, so that using the public network you can provide a service that's much more secure than a typical public network might be. You can spin up firewalls and other very secure network security functions. And then that can help banks be more comfortable moving secure data, carry private data over the open network. And that can help with things like moving more banking applications to the cloud. Right now, a lot of financial institutions are very wary of that and hold things on-prem. And it'll be more efficient if they feel more comfortable doing those transactions via cloud. So in terms of opportunity and disruption, there's a lot of interest that people want in mobile wallet. It's growing. And then the main reason right now that people are not interested in Asia Pacific is they don't want to lose their phone and have their bank account stolen. And then the other one is they don't see the potential to be cash, but that's less of a concern compared to the security. So there's a lot of growth to 2020. We forecast across the region. You can see Philippines is 113.5% growth from today in terms of mobile wallet users. A lot of that's being driven by investments into that space by Globe Telecom and its partner Ant Financial, as well as Smart has its own platform as well. Indonesia is another strong growth market. Vietnam, Malaysia is 42%. And then the other big thing driving this is fintechs are supporting alternative credit. So you can see a lack of established credit is a big problem in ASEAN. And so players in this space are really sort of driving innovation in this area and helping people get connected to credit. And then mobile payments naturally leads to mobile banks. So we start with a mobile payment platform, and then customers get used to doing basic transactions with their phone, and that eventually leads to people being comfortable doing higher banking functions, savings and loans, credits, insurance, through a mobile application, through an internet bank. And you're seeing the rise of branchless banking in some areas. Australia has a couple, and it's sort of a natural progression as payments gains traction. Next comes savings, next comes loans, next comes more advanced services. In terms of the competitive dynamics in the region, there's a few different tracks companies have gone to launch mobile payments platforms. Companies like PayPal, Alipay, Lazada, they started as online marketplaces. Well, PayPal was eBay. At the start, it was eBay's payment platform. And so these are some of the most successful. As you can see, it's like 768 billion turned over in 2018 by Alipay, which is incredible. It's almost $1 trillion. It's like $750 billion. And the next is social apps payments. So you have WeChat, of course, from China, WhatsApp, owned by Facebook, but again very popular in India, in Western countries, in Malaysia, Zalo in Vietnam, Facebook as a global company in line in Thailand, Japan, and Taiwan. In terms of mobility, you have Gojek, Grab, Ola, all trying to get into payments. Grab launched its payments here a couple years ago. And then I have BigPay down here because I know that's a recent one, and that's AirAsia's payments platform. And again, they're focusing on loyalty points to AirAsia in order to sort of drive their adoption. And then we have the telcos. So this one, you have a lot of movement towards finance. So GCash in Indonesia launched way back in 2007, but as of this year, they are now part of LinkAya, which is the government of Indonesia's plan to launch a nationwide mobile credit service. So LinkAya is a company that's partly owned by Telkomsel itself, as well as the Indonesian bank. And so next year they're going to start dispersing loans via the GCash application, or actually it'll be the LinkAya application. GCash out of Philippines is another that's evolving from a simple payments platform into what's essentially a mobile financial company. So Ant Financial invested 45% into GCash about 2.5 years ago. And since then, they've been innovating with alternative credit for payday loans. They're going to start doing insurance. In fact, they just partnered with CIMB to start offering insurance. And they have about 15 million users, active users at the end of 2018. True Money was started in Thailand by True. It's since evolved. They also got an injection of cash from Ant Financial, and True split off the True Money platform into another company called Ascend, which is owned by the same parent, and their vision is to go regional. So they're now in Thailand, Cambodia, Myanmar, Vietnam, Philippines, and Indonesia, and they're one of the most successful ones in the region with 30 million people on the platform. The loans are right now only focused on Thailand, but they'll expand to other parts of the region soon. And then, of course, there's Dash and Singtel, and this is an example of a developed market mobile wallets platform, and they've had less success, less traction, and I think it has a lot to do with the high bank population already existing in Singapore. So this is a little bit more detail on GCash, which is one of the more successful ones. So again, they started as a mobile wallet from Globe Telecom, doing P2P transfers, but now it has QR and MFC, it has savings via CIMB, it has virtual debit card via MasterCard for e-commerce, it has international remittance via blockchain between Hong Kong and the Philippines with that Ant Financial partnership, but also remittance to other countries, just not via blockchain. They do microloans. They have a huge merchant network because they're partly owned by Ayala, which is the largest conglomerate in the Philippines, who owns a lot of retail. And so what Globe wants to do is offer their application not only as a platform for their own services, but as a platform for banks who want to go digital. So if a bank wants to start offering microcredit to customers, GCash wants to be that platform for them. They want to cross-sell. And so some of the technology that they're using is they do facial recognition. So when they're onboarding a customer for a loan, they'll do facial recognition for know your customer. KYC is an important term for the financial industry. They have an AI algorithm to do alternative credit scoring. Again, as I mentioned, they're doing that blockchain remit between Hong Kong and Philippines via their Ant Financial partnership. And while there's no specific plans for FiveG in banking financial services, Globe itself is going to launch FiveG later this year, or that's what they've announced. Then a little bit more about BigPay, a more local one. BigPay is e-money service from Toon Group, launched last year as part of the company's digital strategy. So they're trying to capture customers from across their AirAsia user base by offering big loyalty points. It also has partnered with MasterCard to offer a digital debit card, which is important for e-commerce. And BigPay is one of the platforms that has announced that it wants to win the virtual banking licenses announced by Bank of Malaysia. Currently, it has about 30K registered users. It's a pretty new platform, but they're ambitious, and it's one to watch in Malaysia. So in terms of mobile payments in Malaysia, to become a mobile payments provider, there's 6 principles that Bank of Malaysia has put out. You have to have proper governance of your own organization, so you have to prove that you can police yourself essentially. You have to have proper risk management. You have to take care of the funds that customers deposit with you. You have to make sure that customers are aware of the risk of e-money platforms. Again, you have to properly deposit customer funds in a timely manner, as well as always hold in a trust account at least 100% of the funds that are outstanding to customers, and in some cases you might actually have to have 5% more depending on the nature of your company. And funds must be redispersed to customers in a timely manner. And then again, you're responsible for any fraud or anti-money laundering that might happen via your platform. And these are actually fairly lenient policies. So essentially any large organization has the wherewithal to get into the payments game in Malaysia now, especially with the RPP, the Unified Payments Platform set up last year. So there's almost no fees for e-money users, and then the fee to the actual issuer is only 10 cents per transaction, 10 cents per transaction. And since the introduction of PayNet in 2017, we've actually seen the number of payments done via e-money and their value increase in 2018. So it's a growing space. In terms of recommendations for anyone looking to get into mobile payments in Malaysia, I think remittance is a really good place to start. There's a lot of margin still in the remittance industry, and a lot of those banks who do it and those remittance agents who do it been on challenge for a long time. That combined with the fact that Malaysia has a large population of foreign workers who are constantly sending money home makes it a good place to start. And then I think blockchain is really for any remittance a great place they need to explore. Financial partnerships, telcos can't do it all, and banks can't do it all. So the partnerships, I think, really sort of drive innovation. Banks bring something to the table, fintechs bring something to the table, the telcos bring something to the table, and collaboration, I think, is going to be key for any sort of winning platform. And then merchant networks is probably the biggest challenge in Malaysia. It's crazy to me walking around here and I see 7-Elevens that don't accept anything but cash, and it's I think a challenge where the QR system is going to help, but I think it's also a cultural thing, an education thing. So the more you can advocate to merchants, the better it is, the more successful the platform is going to be. Alternative credit, that's good to grow credit. I think payments is a low margin game ultimately. It's a great way to grow a platform and maybe cross-sell and other things, but in terms of actually making money, credit is a much more margin-rich route. Biometric is important, I think, as you can see in ASEAN. Security was the #1 concern about users adopting mobile money. So two-factor authentication using facial recognition or fingerprints is going to be, I think, helpful for assuaging fears. And then, like I said, you can't really do credit without a bank license. So I think whoever is going to win those virtual licenses is going to have an opportunity to be very successful in advancing their platform. So that's it for the presentation. If you guys have any questions, feel free to ask. Thank you for having me here. Yep.
The previous slide.
This one.
This one. Is there any room for SMEs to be involved in this area?
SMEs? So I think an SME could get involved in payments, but I think they might be better served by sort of joining a loyalty network. it's going to be hard for them to build out.
Too small unless they get a credit union.
Yeah, right. But they can still sort of participate by driving people to their service by offering loyalty as part of a wider network. The thing with payments is that the bigger your network, the better. And so to be the platform provider, it's probably not realistic for an SME, but
offer services in terms of payments.
In terms of
paying for their services through e-payments.
Yeah, exactly. But then paying for their services through e-payments, but then also offering loyalty and rewards for that. Yeah.
Telcos wouldn't be interested, right?
What was that?
Telcos wouldn't be interested in SMEs in this area, right?
No, I think they would. I think telcos would benefit by having any number of people on their platform. And you see in places like Korea or Japan, they actually have like platforms for the merchants where they just enter the details and they get signed up, and it's just like this big wide loyalty scheme where any company who wants to join can join, and then consumers, they see the little logo in the shop and say, oh, I can use my points here, I can get rewards here, so I want to shop here. So it's sort of enabling the consumers to have a network of merchants that they can shop at, but also the merchants have a network of customers that are going to be more inclined to do business with them.
So, but it would be more B2B, operation SMEs?
So there is opportunity for B2B, but it's sort of the B2B2C model where you enable them to sell better to their customers.
The telcos in Malaysia, you don't know of any of them getting into this area?
I haven't seen any big marketing platforms come out from Malaysia, but in the region there are plenty of examples. Yeah.
Region, can you just mention some examples?
So SK Telecom in South Korea has
that side.
Yeah.
How about ASEAN?
ASEAN. Marketing platform. I don't think there's not a telco. There are marketing platforms, but not telco-led. Yeah.
Oh, okay.
Yeah.
Thanks.
Yep.
So you mentioned about security concerns here.
Yep.
So, but how about privacy concern? Because when you integrate IoT, AI in this ecosystem, then they surely have privacy issues. So
Sure. So I think that's why opt-in is really important, right? You shouldn't have that be the default. I think people, right away you see that, oh, I'm already being tracked without me saying yes, and this trust is lost right there. So opt-in is important. But then the other thing you can do is just sort of promise, anonymization of the data. Like it's not going to be used to sell marketing to like a merchant partner or anything like that. It's literally just to improve the service for you. So a lot of that is about internal sort of data privacy governance. And a lot of organizations these days are starting to hire positions like data privacy officer to make sure that with all this data that we are collecting, that we're not stepping outside the rules or stepping outside our own principles. And so it's actually it's a challenge not just in payments or anything. It's a challenge industry-wide. Any data-driven industries is coming up to face this issue, and you're starting to see legislation around it. You're starting to see countries going two very different directions. I mean, you look at China versus in Europe, and they're doing two very different things in terms of privacy. So I think it comes down to, does the consumer trust your brand first? And I think that's actually a reason why in some markets telcos have been more successful than banks in driving payments. They don't trust banks, but they trust their top up. They have to every month, you've been doing it for forever. So you leverage that trust. You come up with a policy, and you stick to it, and then you communicate that to them. But there are advantages to opting into those programs, and I think educating them of the benefits is probably step one. Educating them of your own commitment to privacy protection is step two. Step three is making sure it's opt-in only.
Another question on the survey.
Yep.
Can you share a little bit more the background of the survey? How many have you surveyed, and especially for niche places?
Sure.
And the demographic as well.
Sure.
Urban, rural.
So there's a hold on. If you give me just half a second, yeah, I can pull up the whole. Let me just disconnect from this for a second. It's kind of purple. But the survey is a global survey. Let's pull it up. I don't have the numbers off the top of my head, but I think it's 3,600, and they're from all age from 16 to I think it's over 65. I can get again. You know, maybe better if I can just email you the because I can have the whole detailed list of everything. So rather than me fumbling around trying to find a file, I think if you just give me your email, or I can share it with yeah.
But in general, you would say what 3,600?
Yeah, it's in that range. Yeah, globally.
Globally.
And then there's it's split North America, Europe, APAC, Africa, South America.
So one last question.
Yep.
One of your earlier slide you mentioned about growth. A chart about growth for each country.
Yep.
I'm surprised to see that South Korea is behind Malaysia. So
This is in terms of mobile wallet use. So well, in South Korea is one of the most onerous in terms of regulation markets, in terms of finance in the world. I mean, if you want to do a payment with your smartphone via your debit card, you enter your smartphone, you enter your credit card number, and then you pull out this little card that is like it's like a secondary code that the bank gives you. So to make a online payment from a bank card, you have to do these two things. And it's not because consumers want that; it's because the regulator has these such strict requirements on them. In fact, it's really hard to remit money to South Korea. Many banks just don't even bother, just based on the regulation there. So, one, there's a lot of credit and debit card terminals. So once you have a card, you can tap. But in order to do online payments and stuff, it's just very, very stringent regulation.
If I'm not, I remember correctly, Australia also New Zealand also behind Malaysia, right? Some of the government.
Yep. So again, that's because debit card penetration and credit card penetration is so high, and for I think 5 years now they've had Visa PayWave, wherein it's NFC, so you can just really tap, and so it's sort of eliminated the need for that.
But not Malaysia also have PayWave. Why they don't use PayWave without using mobile wallet?
So I think that has to do a lot with in Malaysia, there's still a lot of places that don't have those terminals at all. Whereas in Australia, literally everywhere in Australia has the PayWave terminals. So the adoption is really high. You don't really need anything else. And then in Malaysia, it's also being driven sort of by this big initiative by Bank Negara Malaysia since 2013. We've been trying to really push these mobile payments in a way that the Australian government has not.